Looking at the stats for the first half of December up until the 15th, December and January are usually the lowest sales month of the year, yet first 15 days of December had more 416 condo sales than any month other than March. Good morning, investors. Bradley here from Watson Estates, and you're listening to the largest, fastest growing podcast for Toronto real estate on iTunes, Spotify, and Google Podcasts. Today is my birthday, so it's a very special day as we jump into the latest news. As an investor and a broker in our local Toronto real estate market, I want to know what is the news saying, what's going to happen, and I dive deep into it and share with you some key things you're going to want to know to stay ahead in the local market. So we're going to start off with what Ontario real estate markets are ideal for first-time home buyers. We're going to dive into a couple articles that talk about where there's maybe some opportunities for you to get your foot in the door. But you guys probably have noticed there's been a ton of failed doomsday housing forecasts for now. And we're going to talk about why have they been proven wrong and what will happen to lending and mortgages in 2021 here in Canada. As mentioned, today is my birthday. It's not just my birthday, it's actually my wife's birthday, and we are both 30 as of today, December 19th, which I'll tell you has the Denny's folks trembling every single year. Actually, this year's the first time in a long time we haven't gone to take advantage of the free breakfast, and they give it to us both for anyone who's curious. And actually tomorrow is my eldest daughter Emily's third birthday, so we got a lot of birthdays in December. So now, of course, with COVID, there's no party this year, but you know what happens when no one comes to your birthday party? I'll tell you, you can have your cake and eat it too. We like to have some fun, practice some comedy, which generally turn out to fail dad jokes, but I'm kind of working my way into it, I guess you could say. If you're listening to us on podcasts, please share this podcast on your Instagram. You can tag me at Watson Estates and wish me a happy birthday that way. And for those of you on YouTube, please leave a note down in the comments below. Send me a warm fuzzy. All right, so let's jump into our first article today, talking about first-time home buyers. And I want to set the tone with this article from theglobeandmail.com. The article reads, many Canadian employers say they won't continue work from home flexibility after pandemic. But part of this, the key part in my opinion of this article, was this part right here. According to the ADP study, the preference for remote work is much higher among younger employees. Listen to this. 61% of those under 34 prefer working remotely at least 3 days a week, compared to 43% that are age 35 and older. Well, why does this matter? Younger dudes, younger ladies out there, they're looking for opportunities where they can work from home, which leads us to the article that sets the tone for this subject right here. And it's called Four Affordable Ontario Real Estate Markets Ideal for First-Time Home Buyers. So with that in mind, young people want to continue to work remotely. Listen to this. Here are some of the markets. The article says, those looking to buy a home in Canada's largest city and in the GTA can expect rising prices in the new year. I love how this is the premise. The reason you're looking outside the GTA is because it's going to continue to be too expensive here. Ironic. As the median price of a standard two-story home in the GTA rises 7.5% next year, as they're kind of saying and using from this. And obviously there's different projections on what that would look like. So for many hopeful home buyers, areas beyond the GTA might be more appealing now more than ever. And this is according to a RE/MAX report. There are four notable regions across Ontario currently offering friendlier average home prices than what you'll see in and around Toronto. Do you want to hear them? Okay, let's do it. Number one, Windsor. The average price in Windsor is up 21% over last year, but it's still at $406,000. Good luck finding a condo for that price. Here's what they say. RE/MAX specifically writes, rampant development, a population boom, and consumer and business interest, which is chalking the automotive capital of Canada up to be the next major urban center in Ontario. There's a lot of opportunities, and I'm talking with a lot of folks that are investing in that market. Number two, Sudbury. Why Sudbury? Well, guess what? The average price in Sudbury is $311,000, and it actually rose 9%. So these numbers, though they seem kind of low, there's still significant growth that's happening. The third one I find silly is Thunder Bay. For years, Thunder Bay was ranked as Ontario's most affordable housing market. In 2020, the average sale price for Thunder Bay homes rose 7.4%. Buying someone, in my opinion, a first home in Thunder Bay is about as useful as buying them an elephant for their room. And then when they say thanks, you say, don't mention it. And the fourth and final city is Kingston. Well, Kingston is consistently ranked as one of the best places to retire in the country based on its affordability, access to healthcare, moderate weather, rich culture, diverse community, and low crime. It remains an appealing option for first-time homebuyers as well. They're up 11% year over year, and they're sitting at $464,000 for that average home. So with all of these things in mind, this is maybe a very good opportunity for first-time homebuyers. But the question is for you, young folks out there, do you want to move to Thunder Bay? Maybe we should bring this thing back a little more local. Let's look at Toronto. And I know we started far out, guys. We're going to get deep locally with your prices. Where is your home today? Watch this. Watch this. So let's come back more local and let's talk overvaluation. Because all through the pandemic, Toronto is so overvalued. You know, you're the only city in Canada that's overvalued. You're in bubble risk territory. It's terrible. Why would you ever invest there? CMHC, right? One of the worst forecasts, that biggest failed forecasts of 2020, and still a very negative approach to what will happen into next year, says this. They just had a CMHC housing market assessment. And John Passalis, he kind of highlights, he says, what are the most overvalued housing markets in Canada? Toronto, Vancouver, not a chance. They are affordable, according to CMHC. Here we got Moncton is the only city in high risk overvaluation. Victoria, Regina, and Hamilton and Halifax have a moderate risk of overvaluation. And I looked at the report. You can find that down in the links below. You can check it out. Toronto, in the overall assessment, we kind of have these moderate risks, but generally when it comes to overheating, price acceleration, overvaluation, and overbuilding, we are in low vulnerability according to the biggest skeptic our market has to offer, CMHC. Crazy. Do you agree? Do you agree? Do you think we are in a bubble? Because I'm going to mention actually down the line a poll that was taken where a lot of people do tend to think we are. So what are we missing here? What are we missing? And people got their panties in a bunch as soon as they mentioned Toronto isn't overvalued. What do you mean we're not overvalued? Right? It's a gift. Enjoy it. Appreciate it. You're welcome. A couple years back, I bought my nephew a trampoline for his birthday, man. And, You know what a grateful person does? He sits next to it. I blew it. Here's the joke. He's sitting next to the trampoline in a wheelchair and he's crying. Ungrateful fellow. That's how funny. Why are you laughing at my nephew in a wheelchair? Guys, come on now. Come on. Financialpost.com has an article. Post haste. These are Canada's 8 most competitive housing markets for buyers, and they'll surprise you. So let's talk about where, not so much where first-time homebuyers can run off into the middle of nowhere to buy a property. Let's talk a little more local. Are there some areas nearby that are a little bit more competitive? Well, when we talk about sales to new listing ratio, as we've covered in the past before, if you're under 40%, you're in a buyer's market. If you're over 60%, you're in a seller's market, and anything in between is considered balanced. Every city, even the failed city of Toronto, which who buys there anyways, is still in seller's territory. But there are those who have exceeded the 100 mark, including Sudbury, 117%. London and St. Thomas, 109%. Thunder Bay, 106%. And also Niagara region in 106%. There's others outside our province, but outside our province, who cares anyways, right? And Toronto, in case you're wondering, sits at a sales to new listing ratio of 76%, which is down from last year at 82, but still well on our way to being a seller's market. For those of you who think that it's cold, Condo owners are trembling right now, though, because there's a difference in between the freehold and the condo space. The past and future for condo owners is grim. The only thing they can do is wrap themselves up in wrapping paper and try to live in the present. Well, do I have a gift for you, condo owners? We're going to have a bit of a change of tune today. Okay, I want us to start to talk about not so much if condos are going to fail, which has been the ongoing story, even in the media today, that's the story, but when will they succeed? And I think we need to start to look at that because it might be now. I'm going to give you some stats here that are completely contradictory to what you're hearing in the mainstream media, but also who cares? Because if this is fact, I want to know about it before everybody else. So here we go. Looking at the stats for the first half of December up until the 15th, December and January are usually the lowest sales month of the year, yet first 15 days of December had more 416 condo sales than any month other than March. Not to say we're recovered, but promising news nonetheless. There is no doubt a big uptick in 416 condo sales. Listen to this, mid-month sales. They look more in line, when I'm looking at these charts, to the freehold. Right? We have a year-over-year change, month over month, of 56%. And this is crazy. The other thing that I'm seeing, because there's been a big gap ever since, looks like what, March? Yeah, March. Actually, not even, maybe really June. From June, there was a breaking point where freehold just started going off the charts in the number of sales that were happening, and condos lagged. Well, since then, this just took right off to the point where it's closed that gap. Now, that said, there's still a lot of active listings in condos, so not to say it's completely recovered, but if this trajectory means anything, watch out. Watch out. Listen to this. Share of active condo listings that are sold conditional are highest they've been since June 23rd, part of the 6 weeks above 10% as the market was playing some catch up in demand from sales lost in March and April. So we're starting to see more units sold conditional than we've seen since June in the condo space. What about months of inventory? Now, freehold, does it surprise you to say that they're the lowest months of inventory point of the year this month, this December? Probably not. But what about condos? The condos are at the lowest since August 25th in month of inventory. So we were seeing this incredible climbing of months of inventory. All the headlines were up. Well, I don't even know what they were. 200% or something ridiculous. A lot. Hundreds of percent. Now we're at the lowest months of inventory for condos in the 416 since August. Condos are at 2.7, and that's the low in December. It was 3.1 average since 1996. So if we look since 1996, it's averaged at 3. Now, obviously, since 2016, it's been tighter, but things aren't looking too bad for condo owners, right? In fact, I actually got a comment as I was typing this up from Zana on YouTube. Listen to what they had to say. I just bought an investment condo in Toronto. I was the second offer. Had to offer full price 1 day on the market. Now, I don't know this specific scenario, but this shouldn't come as a surprise if, in fact, we're starting to see a level of recovery in the condo space. This is fantastic news. The first, in my opinion, this isn't just one piece of good news. This has layers of good news for condo owners where we may be nearing a price bottom, perhaps. And that's the good news I have for condo owners, which leaves only me upset because I didn't get the Xbox Series X that I hoped for my birthday. Who will console me? Console. Anyways. Console me by hitting the like button down below and we'll move along. Okay, topic number 2. Why have doomsday housing forecasts been proven wrong? For now. Remember I told you there was going to be a poll. Here's our poll from John Pasalis. The Canadian Real Estate Association expects home prices to rise by 9%. Korea. The CMHC is still expecting prices to fall by roughly 9% in 2021. Up 9, down 9. This is the question that was responded to by almost 1,200 people. Which forecast for 2021 do you think is most likely to be correct? God only knows, but 64.6% believes the Canadian Real Estate Association was more accurate. Even if we found ourselves an average between the ups and the downs and what people believe, that puts us definitely in positive territory. But this leaves the question. How can you have an opinion of 9% up, 9% down? Why do doomsday housing forecasts, why have they been proven wrong time and again? And so this article is really good. This comes, actually, I will comment it down. I don't have the link here, but I'll make sure that that's in the notes as well. Okay, so why? Why are forecasts so off? Why have we had such conflict? Why has this podcast gotten such good traction this year more than ever? Well, this article went to explain that. Okay, they talking specifically to statisticians, and I think they've identified, I've brought it down to 4 problems as I've kind of gone through this article. Problem number 1. Listen to this. This is a direct text from here. Forecasts based solely on previous observations assume that the past holds the key to the future and that nothing else is required. If other variables inform the model, the forecaster must make additional assumptions about what the future might hold for those variables. So are we just looking at the past? Are we making adjustments for the future? And what are those? There is a ton of assumptions. That's problem number 1. Problem number 2. Projections are often based on partial equilibrium models where a small set of variables is assumed to capture economic or social behavior in a market. Others, so that would be 1, whereas others are estimated by general equilibrium models, which try to analyze the entire market. They're coming from very different perspectives. Problem number 3, the problem perhaps is not with the forecasts, but with the forecasters. They seldom reveal the assumptions they have made, the motivations behind those assumptions, motivations, which I think is important. I'm talking to you guys, real estate boards, I'm talking to you guys, brokerages, I'm talking to you guys, better dwelling, all y'all, right? The statistical tools deployed or the variables they included or excluded, they don't tell you that. They don't tell you that. Is there a bias in a forecast? Absolutely. And problem number 4 I found from this article is forecasters often release point forecasts, a number like 9%, right? 20, whatever the heck percent they at one point said, rather than a range of numbers. And some of them are good at giving ranges. The banks have done a pretty good job at giving the range, right? But they still give set numbers, right? Or they don't also talk about the uncertainty surrounding the estimates known as the confidence interval. So what are the odds of that happening? That's not published. We don't talk about that stuff, but these all lead to problems that exist in and among the forecasters. So what you're saying is that the predictions have come straight out of their badonkadonks. Speaking of which, I got the missus to bake me a Nicki Minaj themed cake for us, because both of our birthdays, right? It was the only way I could think of that we could have gotten 2 cakes in one. All right, let's jump into some hot topics, shall we? All of these things are great topics today to talk about. First one is better dwelling. Canadian markets are seeing a real estate boom with population declines. Obviously, we don't have immigration, which is the big reason underlying this article. Immigration is what keeps our population growth steady. Well, listen to this. Obviously, immigration has slowed down. Canadian real estate prices didn't rise on fundamentals. So why would a change make a difference? Statistics Canada data shows Canadian population growth was flat in Q3 2020. These guys are so bitter. You're so bitter about a successful housing market. Maybe it's because you're a perpetual renter. Both BC and Ontario saw declines from the previous quarter, declines in population. But is population growth not necessary for the growth of an economy? Yes, this is why having immigration is so important to us in the long term. But you think these people are moving in and buying a house right away? Statistics say no. The lowest rate of annual growth since at least the 1950s, but likely goes back much further. Okay, so here's a point. Canada's population growth was flat, and this is attributed to immigration. Another stat that I saw from RBC economists, they forecast a decline in immigration to persist until at least 2022. Of course, we're going to see the negative side here, but we also know that the government of Canada is looking to seriously fast track the growth of immigration. Let's see how that happens, because it matters. In the time that doesn't take place, we will continue to see declines in our overall population. We need immigration for growth. We need to continue to convince people to come to this godforsaken land of ice. Oh, Bradley, you're being too harsh. There's something nice about the cold. I know. I'm joking. I love Toronto. Everyone loves the cold. Look at the movie Frozen, for goodness sake. These kids, man. Speaking of which, I even got my daughter a fridge for her birthday. I shouldn't say that so loud because she might hear me. I can't wait to see her face light up when she opens it. You might not have got that one. You'll get this one. Listen to this. If we're going to do gifts, we might as well be creative about it, right? Like my mom, she asked for a bath bomb for Christmas, right? I'm a dude. I'm creative. So I'm going to get her a toaster, right? Same thing if you think about it. All right, Blog TO, let's move along. This headline is really just a headline I want to share with you. Toronto neighborhood overrun by condos is about to get a lot more. Talking about Liberty Village and all this development of condos, which is a big fear for condo owners, something we need to keep our eyes on if this, in fact, between this and Airbnb and vacant home tax and all of these things are still in the cards to have serious impact on the condo space. Okay. Next article, good news for purchasers of new builds in Ontario. New regulatory authority arrives soon. I could do an entire episode on just this. This is incredible news. This is a big deal. Probably never heard, unless you're seriously tracking the market like I have, you might not have even heard this, but we're going to get more news as we round into 2021. Listen to this. The coming new year will see Ontario introduce a new regulatory authority for home builders and vendors. Starting February 1st, the Home Construction Regulatory Authority, the HCRA, will assume responsibility for regulating and licensing the people and companies who build and sell new homes in Ontario. HCRA will take over the licensing function from Tarion Warranty Corporation, which has massive conflict of interest, by the way. We've been talking about that for a while. Tarion, however, will continue to deliver the new home warranty and protection program, which hopefully eventually that gets taken away too. Let's see. But they also have this new regulatory oversight fee. It's a flat fee of $145 paid on a per home basis. Listen to this, because this fee is what's going to be used to do such things as continue monitoring licensed builders and vendors, identify and take action against illegal and unethical builders, thank you very much, manage the complaint process for consumers, thank you very much, provide educational material, and maintain the Ontario Builder Directory as the official source of background information about Ontario's more than 5,000 home builders and vendors. Thank you very much. Thank you very much. You've been getting away with serious crimes. You want to talk about maintenance fees getting jacked up and, oh my goodness, cancellations of projects through the rear. Hey, I know people love their pre-construction, man. Not me. I'm not much of a Lego kind of guy, man. I mean, it's nice of you to get me that for my birthday, but if I'm being honest, I don't know what to make of it. Another article here that, again, I like to jump. I know there's a lot of articles, but I want to find the highlights for you guys. And so this comes from nationalpost.com. The article is called Real Estate Trends, Talk of the Town. And what I like about this is it highlights one housing segment that I think is going to do quite well, probably better than the other housing segments rounding into 2021. They don't say that in this article, but if you read between the lines, you can maybe see this too. Listen to this. Treb's polling of home buying intentions, meanwhile, revealed that about 3/4 of respondents, quote, wanted to buy some sort of ground-oriented home. So that's a trend that we see. Townhomes, in turn, are becoming an increasingly important part of the mix, Mercer says. That's Jason Mercer from Treb. We've been talking a lot about a greater diversity of supply being required in the GTA, especially of the sort that bridges the gap between condos and detached homes. Townhomes are filling that void. How? Because if in fact townhomes is what we want, which is what I'm hearing here, we need townhomes, we need low rise, give you a little more space, not a condo, not as expensive as a detached. That means townhome demand should be higher than other segments. That's kind of what I hear. But how are we going to pull that off? Well, exclusively zoned for detached housing is this area in Toronto called the Yellow Belt. We've talked about this in past podcasts. It's the target of a new City of Toronto initiative called Expanding Housing Options in Neighborhoods. The city is putting down tremendous amount of effort to meet this demand in this area. Hopefully not too much if you're a townhome owner, but it also gives you indication of where there's opportunities to own. It aims to bring more of the low-rise, quote, missing middle housing forms like townhomes to residential neighborhoods. So expect this to be a big play in the city of Toronto, this Yellow Belt, areas that are zoned for detached that need better and more affordable housing for this missing middle. There's an opportunity for you to take into Christmas time. Here's another article that I thought was just for fun as we round into our last topic. What a joke about a rundown Gingerbread House says about Toronto's real estate market. This is kind of light and fun, light and airy. CTVnews.ca had this article about this person. They had this, it was like literally like this, I think it was on Twitter. Was it a tweet? I don't know. But it was like, I saw the picture. It was actually really funny. It's just like a beat up gingerbread house. Pretty much what everybody's gingerbread house looks like when you guys are done, if you're doing it with kids anyways. And it says, brutal. This house is listed on Toronto MLS for $1.3 million. It's like a crumbling, fumbling, frowning gingerbread house. Terrible. Anyways, is that not how things go? And of course, there was also, actually, you know what? I got one more hot topic for you guys. I could have put this as a major topic, but I think it's important we know. Of course, you guys have probably heard about the vacancy tax coming to a city near you very quickly. Well, Better Dwelling had some counterpoints. The article is called Toronto's Real Estate Board Requests a Laundry List of Exemptions from Vacancy Tax. So we're going to do a vacancy tax. And Treb's like, we're not a big fan of the vacancy tax. This is literally how they kind of position it. We're not a big fan of the tax. However, we get why you're doing it. Well, if you're going to do it, can we propose these things be removed off the list? Right? The list, by the way, of these exemptions is long. It is as long as the number of people that I got celebrating their birthdays in December. Me, my wife, my daughter, my uncle. These are legitimate things. Two of my brothers. I have 5 brothers, by the way. And my dad's dog, Dakota. Well, technically not his birthday, but we like to host Bark Mitzvah for him. All right, so let's look at the list, shall we? Let's look at the list, which is indicating a 1% in Q2 2021 is going to hit these vacant homes. And here's some of the things that Treb wants to see. Number one, if it's a principal residence, you can't tax it. I'm going to give you the list. You might find some of the nonsense ones, but I'm going to highlight those for you after. We also say owners who are unable to rent the property due to market conditions, snowbirds, U.S. citizens, legal matters pertaining to court ordering prohibited occupancy, commuters, properties undergoing renovation or ownership changes during the calendar year, owner or other occupier undergoing medical or supportive care, and if the owner is deceased, and grant of probate or administration pending. These are the list that they want. Some of them make sense, but I think Better Dwelling, I love that they're able to counter and really point to some of the ones that are complete baloney. Listen to this. Some of the exceptions are a little more odd, like commuters. U.S. citizens and snowbirds? The commute from the suburbs is a little rough, but not exactly an overnight thing. Right? Good point. U.S. citizens would be offered more privilege than domestic citizens? Odd, since that's the largest demographic of foreign ownership in Canada. And snowbirds are typically still residents of Canada with just the winter off. When they cease to be a resident of Canada by becoming a non-resident for tax purposes, should they still get an exemption? Very valid points. You're right. Some of this list is complete nonsense, but it is what it is. All right, let's roll into our last topic. So we've done prediction videos or podcasts. You can go back and listen to some of those, what 2020 will look like from a real estate housing perspective. But aren't you curious what that looks like from a mortgage or interest rate perspective? We're going to talk about that in just a second. But there was a post from Scott Ingram. He was kind of highlighting, because it's Treb's 100-year anniversary this year. So they're kind of sharing a bunch of stuff on fun facts. Listen to this one. In 1981, 17% mortgages were considered a psychological limit, eliminating most first-time buyers from the market. 17%. And he ran the numbers, like monthly mortgage payments of $500,000 with 25-year amortization. This is a breakdown. At 17%, principal payment, pay down on that, which the amount of payments you would make is just under $7,000. Principal pay down will be $1,500, and the amount of interest is $82,000. They got an interest, which actually sounds like crazy ridiculous. But I don't understand how you'd pay that much interest, because listen to this, 2% at $2,000 a month payment instead of $7,000. We got a $15,000 principal pay down. That's back into your pocket, and $9,800 in interest paid in year one. So anyways, regardless of how these numbers fall, 2% versus 17%, that is incredible. These numbers, man. Numbers are mind boggling. Well, not for me. Not for me. Thanks to the time my friend got me a telekinetic abacus for my birthday. That's why I'm so smart. Brad, why are you so good at numbers? It wasn't my favorite present, but it's a thought that counts. So let's look at, so they actually asked Ratehub.ca co-founder James Laird, which he's actually referenced a lot. So got a little bit of legitimacy. What do you think is going to happen in the housing market, specifically in the mortgage space in 2021? Well, here's what he says. There are 5 predictions that he makes. Number 1, the Bank of Canada will leave the overnight lending rate unchanged for the entire year. That applies to your variable rate and your HELOC mortgages, unchanged for 2021. Let's see. Number 2, housing prices will appreciate by 4 to 7% other than condos. So you take the condos out. So he's taking a very similar position to a lot of people. He's saying that the condo space, I believe it was in the second half, we'll start to see some uptick, but most of this is going to be in the low-rise space as people search for more space, more room, more area to move their hands around. You know what I'm saying? Number 3, condo prices in downtown urban centers will fall in the first half of the year. There it is. There it is right there. That's your condo space. Number 4, fixed rates will be modestly higher at the end of 2021. Fixed rates will be higher. Okay. As the vaccine rolls out across the country and there's optimism that the worst of the pandemic is behind us, Laird predicts that Canadians can expect bond yields to rise, which will cause mortgage providers to modestly increase fixed rates, particularly at the end of 2021. Lock in those fixed rates early if that's what you want. Don't get too greedy out there, greedy folks. Lock in the rates while they're still low. All these bloody entitled little pricks running around, I'll tell you, shows what kind of parent I am. Everyone wanting the latest iPhone. I want to see you clean the house. I want to see you get top grades and follow every single house rule that I arbitrarily instill on you before you get that phone. It's my way or the Huawei. And number 5, there will be no new mortgage regulation introduced in 2021. They say there's going to be all this craziness going on, and so they're not going to stamp, meaning that 2021 might be the perfect time to refi your home or apply for a mortgage. Let me ask you guys, do you think interest rates are on their way up? Do you think they're flat? Do you think they're on their way in the toilet? And speaking of toilet, as we wrap up this podcast today, the urban bathroom shortage worsens. With libraries, public parks, and other municipal facilities shutting down their restrooms because of COVID and many retail stores doing the same, there's increasingly no place to go for people walking about town. Well, Toronto is a role model. It's opening 79 new public washrooms this winter. Thank you, Toronto. Thank you, Toronto, for those who need to go to the crapper. Anyways, I hope you guys have a fantastic day. I'll be honest with you, I love sharing my birthday with my wife. I asked my wife what she wanted this year. I'm like, what do you want for your special day? Our special day. And I never really got a solid answer, which, I mean, I guess that's good. I don't know. I mean, I've been thinking through it, guys. Tell me what you think about this. So I've been thinking, we've both been kind of into Formula One lately, or at least I have. She's been kind of on, Instagram while we're watching it together. But, so I want to get her something that goes from 0 to 120 in 3 seconds. So, I got her a scale. I'll let you know how it goes. Please make sure you hit that like button, subscribe, leave us a rate and review, call it a birthday present for this year, and I will see you guys next time. Take care and keep it real.